expenditures listed below and classify each of the expenditures as a capital expenditure or a revenue expenditure. The way I'm thinking about capital versus revenue is capital is stuff that you spend money on to acquire something versus revenue being you spend money on it to keep generating revenue. So, for example, the purchase price would be capital expenditure because that's the price you paid to acquire a new asset. Ordinary recurring repairs. Well, if it says ordinary, it must be revenue, right? Because you're keeping it alive to keep generating cash. Lubrication, right? Same thing. You don't even have to finish these sentences. You're just making sure your asset stays alive. Let's see here. Periodic lubrication after machinery. That's going to be, or lubrication. Oh, my bad. Let me back up. Lubrication before machinery is placed in service is capital expenditure because it's the cost required to bring that thing up to generate revenue, which means that the periodic lubrication is the revenue expenditure because you're keeping it alive. I should finish these sentences. Major overhaul to extend useful life 3 years is going to be a capital expenditure because you're like increasing the life of that thing, essentially buying a new truck, right? Putting in an engine or something like that. Sales tax paid on the purchase price, that's capital because you have to pay it before you can start using it and move in. Transportation and insurance, same thing, right? In transit from seller to buyer, so you're acquiring this new asset. Installation, yep, you're paying someone to bring in a new asset. Training of personnel, yep, you're making sure this asset can run properly. There you go. That's just the simple sort of classifying of capital versus revenue expenditures very quickly.